Welcome to Get Rich Education. I'm your host, Keith Weinhold. The pandemic has created real estate winners and real estate losers. We're looking at a real bright spot today. Who is one of the biggest winners and why, and what you can do to take action and come alongside it today on Get Rich Education. Property investors can get killed with maintenance costs. That's less likely when you buy brand new construction. Let me tell you about JWB Real Estate Capital in bustling Jacksonville, Florida. They pioneered the build-to-rent model where you can invest in new construction, turnkey rental property. That's why JWB was featured on the front page of the Wall Street Journal. To learn more and see inventory, start now at newconstructionturnkey.com.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
Welcome to GRE, from Utah's Great Salt Lake to Southern California's Salton Sea and across 188 nations worldwide. I'm Keith Weinhold. This is Get Rich Education. When we talk about winners and losers in the COVID pandemic, well, in residential real estate, it's not a pandemic-stunted real estate industry. It's largely a pandemic-fueled property market as the virus has accelerated migration and population shifts. Some areas are more prosperous than others in this shift, and some areas are more prosperous than others in this shift, and some property types are more prosperous than others. Just take a look at two different residential fourplex buildings even. They might behave differently just if they were constructed in two different ways. The old up and down style fourplex, where all four units have one common entrance for all four families, in shared hallways and a shared laundry room, that's less preferable and can even have a lower occupancy rate because it has lower tenant desirability. Conversely, what we'd call a townhouse style fourplex, where all four units are side by side and all four families have their own separate entrance to the outdoors without any indoor common areas. Now that townhouse style property, that's the winner fourplex. In this case, then there are winners and losers in the pandemic geographically today as well. At its core, we're really discussing humans interacting with the land. That is geography and real estate. And again, New York City is the most convenient example of a pandemic loser. For the professional that was paying $4,000 rent in their Manhattan studio apartment or one-bedroom apartment, well, that worker now has the pandemic-driven latitude to work from anywhere. They can go to a place like Florida that's warm and has a low tax environment and only pay $1,500, not $4,000, but $1,500 for a single-family rental home with a yard, even a quarter-acre yard and a garage, and have 3 bedrooms and 2 bathrooms. Now, some percentage of out-migration New Yorkers, they're also going to move out of the city and into a nearby area, maybe Connecticut or the Hamptons or Westchester County or New Jersey. But for the urban professional that thought, someday I want to move to sunny, low-cost Florida when I retire, well, now they're untethered before that someday ever occurred, and they can move to Florida and even finish their career in a work-from-home capacity. So when we talk about pandemic winners today, we're talking specifically about low-density housing in Central Florida that is brand new construction, and it was specifically built with renters in mind. And as you're going to see, the numbers really work for out-of-state investors that want some low-hassle buy-and-hold rental property. And so many Get Rich Education listeners have bought from this group now since we first had them in the show here 5 or 6 months ago. Interestingly, it's not just one market. They serve a wide swath of Central Florida, from the Atlantic coast in the east, and that's also known as the Space Coast, just about all the way west to the Gulf of Mexico. So Central Florida has a width of 100 or 150 miles, depending on where you measure, As you'll see, there really is quite a confluence of attributes that make this opportunity very much like the time is now, the place is here. And if it's not enough, this group primarily deals with investors like you, not owner occupants. They typically sell homes to investors like you for less than they would to an owner occupant, such that your new construction rental property, it'll often appraise for $5,000, maybe even $10,000 more than what you've agreed to buy it for. So you've got that built-in equity, that cushion from day one. And why would they sell to an investor like you for less anyway? Well, a few reasons. Investors like you tend to buy multiple properties, even a few at a time, and you also tend to be that repeat buyer that comes back for more over time. So over time, it's easier for them to deal with their buyers. And then additionally, like the owner-occupant buyers that are buying a home for themselves, they can often be more finicky than the buyer of a build-to-rent brand new construction home. You are largely emotionally detached, and you'll often close faster than that owner-occupant, therefore. And occasionally, this group, it's kind of funny, they do want to sell to an owner-occupant just once in a while to see that they can indeed get more than what they can sell them to you for, and they can. But first, coming up here on the show in future weeks, it's the return of Rich Dad tax advisor Tom Wheelwright. Tom and I are going to talk about Trump's tax plan versus Joe Biden's tax plan, and which one would be better for investors, since we are coming up on the presidential election soon. As that most recurrent guest ever, I think it's going to be Tom's 15th appearance here on the show. I've lost count by now. Also, another Rich Dad advisor, Garrett Sutton, returns to tell you how to scam-proof your assets. Then later, the mastermind and author of the very popular Miracle Morning series of books will be here with me as Hal Elrod motivates you on his debut. That's all down the road here on Get Rich Education. Let's talk about a pandemic winner, new construction investment property in Central Florida. I'd like to welcome two guests onto the show today. They work together and they both provide brand new construction Florida income properties, predominantly single-family homes, duplexes, and townhomes. First, she's been a realtor since 1979, yes, more than 4 decades, and she consistently ranks as one of Central Florida's top 15 realtors. She works with more than 1,000 investors, most of whom have never even seen their investments or visited Florida. Welcome back, Jean Gillen.
Hi, thank you so much, Keith. It's wonderful to be here.
Then he's a real estate developer with over 18 years in the business and more than 400 turnkey properties successfully delivered. Welcome back to Get Rich Education, Wagner and Alaska.
Thank you so much, Keith. It's a pleasure to be here.
Gene and Wagner, Florida is one of the fastest growing U.S. states. A lot of people know that. Years ago, Florida surpassed New York to become the third most populated state, only behind California and Texas now. With 21, almost 22 million Floridians now, Florida has more population density than either California or Texas. Now, every year, the moving company U-Haul, they name their top growth cities. So what U-Haul does is they calculate the net gain of one-way U-Haul trucks entering a state versus leaving that state in a calendar year. So it's not a perfect measure of economic growth and population growth, but it is a pretty good indicator. And remarkably, 5 of the top 7 U.S. in-migration cities for U-Haul trucks were in Florida. And they do include some of those central Florida areas that you guys operate in. And by the way, those 5 are Kissimmee, Ocala, West Palm Beach, Port St. Lucie, and the combined Bradenton, Sarasota area. So when we talk about why Florida and why now, it's this burgeoning population growth, which really helps fuel that economics 101 of supply versus demand for real estate. So tell us more about why Florida, specifically that wide geography that you operate in Central Florida.
I'll start off and then Wagner can tell all the names you just said is where we're developing now. But I would say Florida, and I always say because we're cheap and cheerful. For $250,000, you can have a 4-bedroom, 2-bath home with a pool that would equate to maybe $1.5 million in California. Kind of tells you something. And that's brand new. We also have our state, our government really is behind us investors. So it's something that all kinds of good things come to investors in Florida because Florida wants you to invest your money here so they have people have a place to live. So that's important. It's also very friendly state to investors because, for example, you can really evict somebody in about 28 days. The sheriff will do it for you, $750. We have no rent control. We have nothing like that. And if you don't pay your rent and you are evicted, you will never rent in the state of Florida again.
Now, that's pretty serious if a tenant knows that they have that hanging over their head.
It is. Especially, people always ask us about Section 8, and we don't really do Section 8 very much. I don't even know if there's a lot of it around, but we don't really seem to have any problem getting renters right now. In the last 2 months, in May, I closed on a little house, and we had 52 inquiries in 3 days.
Gosh.
And we didn't expect the house, so it rented for $1,400 and the house was $140,000. That's the kind of thing we're seeing here. We're seeing about 9% appreciation every year. And we know that because we watch what's going on with other builders. And every once in a while, Wagner will say, let's sell one to an owner occupant so we can make sure. And we are always amazed. One thing that we want to tell our listeners and people that are thinking about buying is most of our properties have built-in appreciation. For example, in Palm Bay, they're 220, and you will see an appraisal of 245. It comes on a piece of paper, and they will also say that the replacement value is 279,000 because nobody can build what these people are building because they're building quite a few. In Ponciana, we have about at least $10,000 worth of appreciation. But what's happening in Florida is, and I always say this, we appreciate 8 to 9%. These are new properties. That's why they're going to appreciate quicker than old properties. And what's terrific is the cash flow because we get all kinds of wonderful incentives with the insurance is lower, all of that kind of thing.
You're probably thinking right now, and how do they do that, right? There's no secret sauce. The secret sauce really, I will tell you guys, is the economy of scale. So we're building many, many houses. So when we buy, for example, lumber or concrete or shingles for 100 houses, we have that discount. Instead of us and the construction guys keeping those values, we actually pass it along to the investors. So Palm Bay, for example, we would love to send you a copy of the appraiser that one of our clients has actually shared with us. Of course, his information is not there, his name, but you can see the copy of the appraisal, how much it came in for, and we're very glad that you actually have equity day one when you buy those properties, right? Also, you have positive cash flow, and also you have appreciation. So it's not very normal in other markets where you don't work directly with the development team and the sales team to have those equity day one. And that's something we take a lot of pride. We're not greedy. We want you to start well so you can build a very large portfolio and enjoy the fruits of your portfolio's labor for you. Funny thing, Keith, I went to a doctor this week, and he asked me, what do you do? I says, I don't do anything. My houses work for me. So that's what I want your listeners to feel one day.
That's a good one.
If your dream is to retire, do it. I couldn't do it. I stayed retired for about 3 months. But having the financial freedom to do so, it's absolutely amazing.
Right. Not everyone can understand that, having financial freedom when you're actually young enough to enjoy it. But yeah, you do such a large volume that you do have those economies of scale. And of course, one gets that built-in equity when you have the appraisal commonly exceeding the contract sale price.
I wanted to compliment what Gene says, which are amazing, amazing factors in why Florida is so popular right now. But also, I wanted to mention, Keith, that we have one of the highest PhD per capita in the country. So not only the amount of people moving, migrating into Central Florida, but also the quality and the education level of those people. A lot of those people, they'll come here for a 3 to 4 year contract. That's why they're looking for properties that are brand new and available for rent. We have one of the highest medical manufacturing devices companies and production in the country here in Central Florida. We have one of the largest number of hospital beds in the country here in Lake Nona, at the hospital city in Lake Nona in Central Florida. So when you look at Central Florida, we are much broader than actually what we used to be in the service industry. We also have the Bright Line, which is a train line that connects the Orlando International Airport to Port Canaveral, which is the second largest passenger cruise port in the world, all the way down to Miami. And this is all private capital that's actually being funded by Sir Richard Branson. We have Elon Musk. We have Jeff Bezos coming to Florida. So it's not unique that we just surpassed Texas on the in-migration patterns. It's quite amazing how long a property stays up for rent here in Central Florida. If you have purchased a property from us, you probably will notice that it takes less than a week. And one of the property managements, the companies that we work with, it states clearly on their contract, if they don't get a tenant for you in less than 15 days, your first month of the management fee is free. We have two problems. We're renting them very quickly and we're selling them very quickly, and we don't have enough inventory. So that's the bad deals. I wish I had more houses to put more tenants.
Those are the problems that you want to have in the real estate market, no doubt. And it's interesting about the doctors per capita. And not only does that doctor make a very capable renter, typically with the financial wherewithal to pay the rent, but it's about that multiplier effect that that doctor brings into that economy, the staffs and the RNs and the technicians that are going to be fueled and those jobs that are created, and the pharmaceutical industry that complements that, and so on. So those are the kind of jobs that really provide multipliers to the economy. So tell us about some more of those business sectors, just who your renters are in oftentimes these new construction rental single family homes, with all these business sectors that are there, with what you have going on the Space Coast, which is really the easternmost extent of the geography that you serve there, and some of those other business sectors. Just who is that tenant?
Great point, great question. I'm going to start from east to west in Central Florida. So if we go all the way, as we had mentioned, Port Canaveral, right there you also have NASA. You have what we call the Space Coast. And on the Space Coast, which is the I-95 corridor, which connects New York all the way down to Miami, we have a city that's called Palm Bay. Palm Bay is actually the home of Lockheed Martin. We have over 400 technology companies in that area, including a lot of defense contractors. So who are our tenants? A lot of the people in the technology industry that also comes here to work between a 3 to 4 year contract. Those people do not want to buy. They want a brand new house with tile floors, no carpet, granite countertops, walk-in closets, blinds, all the bells and whistles, hurricane-proof glass so they can be safe. You don't have to put up hurricane shutters. They also want to probably have a little bit more of a mature landscape and make sure that they have all the bells and whistles. For example, Wi-Fi garage door opener. So thinking about that in mind, we serve now a lot of the defense contractors, a lot of the people that come here to work for SpaceX and all those major companies that are moving into the Space Coast, as well as technology people. Moving a little bit west, Keith. Now we're leaving the Space Coast, we're jumping into the I-4. I-4 is also another major highway that connects Daytona Beach all the way down to Tampa, St. Petersburg.
That big east-west running highway that basically bisects Florida and cuts it in half north to south.
You're absolutely correct. And that's the pattern of the growth that we're seeing here in Central Florida. We just acquired a piece of land, which we will actually be building a lot of new properties for 2021 in Deltona, which we'll be bringing that up on a later show for you guys. Very exciting area. A lot of Amazon distribution centers, over 1.5 million square feet of distribution center right there. Across the street from this project is a brand new hospital, and you're probably about 3 to 4 minutes off the intersection of I-4. Moving a little bit west. Now we're almost in Orlando, but we're going to go to Point Siena Kissimmee area. What's happening there? What are the tenants, right? Once again, healthcare. Brand new hospital. We also have a university. It's a community college which has a contract in association with UCF, which is one of the largest universities in the country on actually student count. And those universities are just booming. They just have a lot of professors coming in, talents coming in from all over the world to teach, and generates a lot of a local economy, as well as the sub-companies to come to serve those universities and hospitals. We also have a city that's called Neo City. LG, the South Korean technology manufacturing company, just purchased 50 acres, and it's under construction with a $500 million project that is going to be servicing the area. You have Nucor Steel, you have Public Supermarkets Headquarters, which is the largest supermarket chain in the Southeast United States. And a very fun fact here is during COVID, they actually hit a $1 billion a day on sales because people were cooking, they were staying home. So amazing jobs, amazing economical drivers. And last but not least, let's go a little bit more towards Ocala, right? What's going on in Ocala? Well, we have the Villages, the largest retirement community in the country. What does that bring? More healthcare. People need care. So we have assisted living facilities, level 1, 2, and 3. A lot of our tenants in that region are people related to healthcare. So nurses, people that work on therapy, people that actually service those golf courses, retail. We have just seen that the latest acquisition that the Villages did is 8,000 acres. Close to Leesburg, Florida. They're building 46,000 new homes for people that are 55 and over. That's one of the reasons why we built on the surrounding areas. So the service workers, which are not 55 or can afford those very beautiful retiree homes, we can service them. So as I have told you, a lot of healthcare workers, a lot of distribution centers, a lot of Chewy is here, FedEx is here, Napa Auto Parts Distribution is here, Cedar Creek, Medline, which is one of the largest distributions of medical supply companies in the country, is here. LG is here. I mean, NASA, SpaceX. I mean, I just don't have enough time on this show to list all of them, but it's quite amazing and very diverse on a tenant base.
You know what's interesting, Gene and Wagner? A differentiator that I find in Florida, and perhaps especially Central Florida, is that oftentimes when we look at a market to invest in, we're thinking about one geographic market, like one dot on the map, like, oh, you're in Dallas, or maybe you're not too far outside Dallas, or you're in Indianapolis, or maybe you're not too far outside Indianapolis. But with Florida, with all the population growth, almost 22 million people now, we're really talking about areas that might be deemed as outlying areas if they were in other states like an Ocala or a Deltona or a Kissimmee. But there's so much growth there that I don't know whether Florida is really immune to that effect of not being right close to a central business district or not.
Ocala is only an hour north of Orlando, and Sebring is about an hour and 20 minutes. Then we go to Deltona, which from Orlando is about 40 minutes. So, and then we go to Kissimmee, which is about another 40 minutes. So it's all in the same area. And then Space Coast, maybe an hour from Orlando. But there's so many international airports. For example, we have Melbourne, which is about 5 minutes from where we're building there. We have Orlando, which is an international airport. We have, it's called Orlando Sanford. Then we also have one in Daytona. Then we have all these international airports. So it's easy to get in and easy to get out. More direct flights to Orlando Airport than any other airport in the United States. Not more flights, but just more direct flights. There's a lot of things going on. Plus, everything that Wagner said is really very interesting because when a company decides to move here or is thinking about moving here, the state gives them all kinds of incentives. And the incentives are really good because they bring the company here, which brings jobs here, which makes our unemployment very low. And there are many, many different areas. So we don't really care that they're going to get a little bit of an incentive through taxes. That's good. Because the people that are moving here don't pay state taxes anyway, so they want to come here. So we have two incentives, and our state is solid. We're functioning well, the economy is well, the government is well. So it's a little bit different than those states that are having economic problems.
That's a good point about the number of airports that you have there. Airports are often economic drivers themselves, and other industries do want to pop up around airports for that ease of distribution and more. So you, the listener, might be wondering, well, what is this all translating to with these diverse business sectors for the amount of rent that's being recovered in the pandemic? We're going to learn about that next. You're listening to Get Rich Education. Our guests are Gene Gillen and Wagner Nolasco from the Realty Doctors. More when we come back. I'm your host, Keith Weinhold. The people that our listeners can't stop talking about are Ridge Lending Group and MLS 42056. They provided you with more loans than anyone. It's where I got my last few loans, and they finance single-family income property up to fourplexes. They're the number one lender for both beginners and veterans. Start your pre-qualification, chat with President Chaley Ridge personally, and you'll end up with your custom plan for expanding your cash flowing portfolio. Start at ridgelendinggroup.com. Fortunately for you, Congress has made it possible to get up to $200,000 out of your current 401k or TSP to invest in real estate or your own business, and that's even if you're still working. The thing is, you can get all this money tax-free. The EQRP is your secret weapon. With the CARES Act expiring soon, the EQRP company helps you unleash your retirement funds now. Learn more and text message QRP in all capital letters to 72,000.
This is Rich Dad Advisor Garrett Sutton. To grow your wealth, listen to the always valuable Get Rich Education.
Welcome back to Get Rich Education. We're talking about Central Florida real estate investing with Gene Gillen and Wagner Nolasco. Interestingly, Wagner, I think of the fact that you guys actually avoid investing right in Orlando. Tell us about that.
So, Keith, it's very obvious, right? When you go to markets that are growing tremendously well and actually property prices are actually going up, well, guess what? They're not going to cash flow anymore, right? So if you go to Dallas itself, or if you come to Orlando, or all the major cities, that city won't cash flow. So as an investor, unless you wanted to have a second home, or if you want to have something that you can come and use, it's not going to cash flow. So as an investment, we don't advise purchasing in Orlando just because it won't cash flow. It won't positive cash flow. Also, the other areas that we actually service, which are Palm Bay, Kissimmee, Poinciana area, Ocala, and Sebring, all of them have amazing positive cash flow. And they vary from 0.8 to 1% all the way up to 1% depending on the area. Some of the historical data in some of those areas as far as appreciations, they go all the way from probably 5%, which is the state average in the state of Florida. But we have seen 12% appreciation in some of the areas where we are. So amazing data, all positive cash flow, which you would not find in the major cities such as Orlando.
Yeah, and that is one of the benefits of brand new construction. They do tend to appreciate better than existing construction property, but these rent to value ratios of 0.8%, 0.9%, maybe even close to a full 1% rent to value ratio, those numbers really work, especially when you've got low interest rates. Tell us some more about that product type. We're talking about always brand new construction, and you guys only deal with investors, so you really know what they're looking for. Tell us more about that product type, what we're actually talking about here in the neighborhoods and then the properties themselves.
Keith, some important factors that we have discovered is for over 22 years, we only work with investors. Also, Gene and I, we came up with a concept, being investors ourselves, which what we call tenant resilient housing. What is that? We actually invest in research and development quality materials to actually substitute carpet, for example, which you have to replace or have it cleaned every 3 to 5 years. So now we use tile or waterproof vinyl flooring. We don't use Formica, which can be easily burned by a tenant. We use granite countertops or we use quartz countertops. We don't use regular water heaters. We use either professional or commercial water heaters because those ticket items, they will eat up on all of your budgets and all of your financial reserves that you have, and your capital expenditure can become really, really high. So we created a product that it's above average and it's much better than a regular builder will build. Focus on the tenant and how much they can destroy on a property, which we all know they can.
It's almost a guarantee that they will.
Exactly. And thinking about that in mind, we build a property that is actually focused of the tenant in mind and how can they actually last a lot longer and cost you a lot less to own that property. So it's called tenant resilient. They have hip roofing, double pane glass, LED lighting throughout the house, mature landscaping, vinyl floors, waterproof vinyl floors, or tile throughout the house. And those properties, they vary in price. They start at $159.9 all the way up to $220. But all the properties are either 3 bedrooms, 2 bathrooms, and 1 to 2 car garage, or to 4 bedrooms, 2 bathrooms in different areas. that is a two-car garage. And how do we come up with that mix? We understand the needs of each one of the areas, right? So areas that have a lot more tech people, they need a little bit of a better, bigger, more spacious house with better finishes. 159,900 house, it's probably for your entry-level professional that is looking for some place that is a 3-bedroom, 2-bathroom, and a 2-car garage. So we understand deeply what the drivers on the market is, and that's what we build.
So with those price points typically between 160K and 220K, then we're talking about a new build single-family home. And tell us about the rent range.
So rent range, we have seen as low as $1,350 all the way up to $1,850. That's what they vary as far as range on rents are concerned. We have had battles that we have got more rent on some of the properties because that's the only house becoming available that week. So we did have a bid out war, which is happening quite frequently in Florida. We have seen a lot of migration patterns, especially from the north. New York, New Jersey, Connecticut, with everybody working from home nowadays from the COVID, they don't have to live in a 300 to 400 square feet and pay $5,000 a month where they can get a house for $1,850 a month, which is 4 bedrooms, 2-bathroom on a quarter of an acre minus plus, and probably pay $1,850 a month. So we have seen families moving here in huge numbers, Keith.
Yeah, for that New York or Connecticut worker that has now become comfortable with working remotely, has now had an employer that tell them they can work remotely. A lot of them think, why not live in Florida with a lower price home and a lower cost of living and no taxes? So there are obviously so many drivers for people relocating there. Tell us more about, as we think about these communities in our mind's eye, are we talking about infill projects or are we talking about developments of new construction homes?
One of the things that we like to tell people is that our houses are cement block. They are not wood with brick over it. Brick is a facade. We deal with cement block. That's going to make everything in the future, when you sell, you're going to get a better price than a wood house. That's number one. Number two, your insurance, which you'll see when you get our cash flows, you think, how could the insurance really be $47 a month or $29 a month? Well,
right, it's low.
Built in, yeah, it's crazy. It's built in 2020 up to 2020 codes. And as Wagner always says, this is really the codes for Florida are much more stringent than most other places. We do not build in flood areas. And as you mentioned, it's infill lot. For example, if I was being sold my investors houses in a PUD, that's a planned community that has a gate around it or a way to get in and a way to get out. If there's 200 houses, I have to watch and make sure there aren't other people in there buying to rent, because you only want a certain amount of people in a planned community or else the community goes down. Why does it go down? Because renters really, you get one and two every once in a while, don't really take care of a house like an owner-occupant would be. But our renters stay in on an average of 38 months.
That's terrific.
That's a big one, right? And as Wagner said, since we try to put hardwood floors of some, it could be tile, it could be whatever, hard floors down, we don't have that every 2 or 3 years having to change the carpets. I always say it's going to save you at least $9,000 in 10 years, because if you keep changing the carpets, it gets pretty expensive. So there's a lot of those things that we've thought about. Some places we don't have it, but we are trying to do all of ours tenant resilient.
Yeah, when it comes to new construction, infill homes do have some advantages over an entire new development of new construction homes. And of course, by infill, we're talking about a new construction home that might be flanked by 2 existing construction properties. And some of those advantages are for that tenant or that resident in that infill new construction home. First of all, they don't have to envision what kind of neighborhood is going to build up around them, because it's already been built up around them, so they can see what their neighborhood is like. And the other thing is that inside those existing home neighborhoods, those residents often typically have substantial equity in their properties because they've lived there for a while. So in the event of a downturn, people are a lot less likely to walk away and have foreclosures and have a downdrain in prices, because you are in that infill neighborhood where you do have equity from those homeowners around you already in them. And of course, it tends to be less likely to be a primarily renter neighborhood. It's more of a homeowner neighborhood typically. So Tell us more about really the glue that makes this investment work as you essentially offer turnkey property for out-of-area investors where you furnish the property and you have the property management and you have the tenant in there for the investor already. Talk about that management and especially with how that's gone in COVID times.
Keith, that's a great topic because everybody always talks about property management, and that is one of the points that can really make or break a deal, right? Especially being an out-of-state investor. 99% of our investors, they have never come to Florida to see their property, to acquire their properties. So the trust level between our company and the investors is absolutely huge. And that put us in a scenario that we have so much responsibility on delivering that service. What do we do? Gene's son, which is Tommy and Ben, which is a former NASA engineer. He's the one that used to strap people into the space ships and just send them up.
Yeah, a former NASA engineer, almost overqualified to be a property manager.
He really applied a lot of the skills he learned into softwares, into making an amazing property management company. So they actually have over 30 employees. They have over 1,200 properties under management, which some of the data that I'm going to be sharing with you really is mind-blowing. Out of those 1,200 properties in 2019, we only had 7 evictions. What is that? That's 99.7% eviction free. How do we do that? By pre-qualifying the tenants. Placing a body into that residence is not the answer. Placing a good tenant that is going to be there, maintain the property, and pay the rent on time is amazing. As you well know, Kate, during COVID, everybody was so concerned about rent collection. We couldn't actually evict anybody. So what happened? Our rents are due on the 1st of the month, not the 5th. Everybody talks about grace periods. We don't like that because once you give them until the 5th to pay, that becomes your new due date.
Right. It just slides, yes.
And we actually saw that April, May, and June, actually coming into July, our collection of rent were about 96% on time, which is pretty good compared to any other market. What have we learned? We were not communicating enough. We were not communicating with our tenants enough. So what we do now is we have a bi-weekly average communication with the tenants, making sure they're still employed, they can pay their rent, do they need to be on a payment plan, what's going on. And we have seen after COVID, which we're still under COVID, but we now have 98.5% collection on the rents on time.
That's remarkable.
So we are still learning on how to work with COVID, and actually we are actually picking up from a lot of the things that we haven't done before, that we learned how to appreciate the good tenant that we have. And our collection rates are really high. State of Florida, we have today, very blessed to say, 0 properties available for rent. All the properties that are sold and delivered are either tenanted or in the process of contracting for a tenant between background check and moving dates. So we're very blessed here. We really appreciate all the investors that trust us because property management overall and the sale of the property, the maintenance of the property is really a turnkey process that we offer to our investors here with new construction in Central Florida.
And you do offer new construction properties. You do have availability now. That is the advantage of doing new construction property. You can create more inventory, but that's great news that you don't have anything available for renters. That tells you a lot about the saturation that you're getting in the market there. If you want to learn more, connect with a provider and take a look at their properties. You can learn more at getricheducation.com/Orlando. Once you get pre-qualified and you think you want to put some new construction income property in your portfolio, you can go there. Do you have any last thoughts, Gene or Wagner?
Well, I think if you miss this opportunity, this is an opportunity. We had somebody today get a 3.3% loan, 30-year fixed with 20% down. People say to me, well, when should we sell? I'd say, well, if I got a 3.3% loan for 30-year fixed, I probably never sell because it's like somebody else is paying the whole thing off for me. So I can honestly say this is one of those opportunities to get in the business of owning rental property because we have great prices, as Wagner said, 160 to 220. Can't beat that. You can buy now. You can say we want something, but we don't want it to close till March. We can do that. And we have people coming here all the time. It's not like 5 years ago and I'd say, oh, we don't want to close in November. Oh, we don't want to close in February, right? Well, it doesn't make any difference because people are coming all the time now. And that's what makes it really a special place. And no matter where you invest now, do it, because this is the time to do it. Correct, Wagner?
Gene, I couldn't agree with you more. We are going through Florida right now, and another thing that people keep telling us, what's going on with the price of the properties? Do we have enough risk to invest right now? I just wanted to let you know that as of today, we have 13% less inventory than what we have demand in Florida. So that tells you that we're not going anywhere. We have more people moving in, acquiring, renting properties than actually what we can supply. We have seen a big trend with the national builders diminishing the amount of new projects that is coming off the ground because they have lost so much money in the stock market and their shares are now worth what they used to be, that now they're finishing a lot of their projects, they're not starting new projects, and we have 9 builders working exclusively for us, building close to 2,000 properties in the next 36 months. So we're here to stay. We've been here for 41 years. We're not going anywhere. And as Gene have well said, is I am a personal investor. I have my portfolio. Gene also invests as well. We drink from our own Kool-Aid. We buy where we sell. And that really means a lot to me as a service provider, as a client as well, because I wouldn't sell to you if I wouldn't buy it myself.
That says a lot. And I know that 3.375 rate that Gene mentioned there on that property for a 30-year loan was for an investor loan, not for a primary residence figure either as well. So the numbers really are in one's favor if they can qualify for rental properties these days. Gene and Wagner, thanks so much for coming back onto the show.
Thank you so much for having us.
Thank you so much for having us. I just wanted to say that I am a great listener of yours. I really appreciate your podcast. You always bring great talent and great information for us. So thank you so much for having us, Keith.
Oh, that's so appreciated. Yeah, this could really be the right opportunity if you want to buy some properties to rent out to others. I think one element of understanding here is that impact of low mortgage interest rates. And when you understand that back in 2006, when mortgage interest rates were 6.5%, a $100,000 mortgage would cost you about $630 a month. Today, at a 3.5% rate, for that same monthly payment, you could get a $140,000 mortgage. Gosh, what a difference. Yes, so a $100K mortgage back in 2006 would cost you the same monthly payment as a $140K mortgage today. That's a 40% increase in your purchasing power. You get 40% more for the same monthly payment. So when you get that leverage and you apply it to the right asset type like this, you can see why I say that potentially the time is now and the place is here. Now, with their property management, if you choose to use them, they have 4 professionals to help cover that wide geographic area, but you probably won't hear from your property manager as much as you would with an older home. They are properties built with renters in mind. Rather than these really over-the-top fancy fixtures, they use durable finishes, and it's still quite nice. And from the tenant perspective, they love the brand new construction, maybe even more than you. I mean, they are the ones living there after all. And the provider will tell you that 80% of their tenants stay in the property for more than 3 years. So you can see why a lot of Get Rich Education listeners have already bought there. When you consider the rent to value ratios are 0.8%, 0.9%, or even more, and that's on new construction. I mean, I've bought a number of existing construction Florida single-family rental homes myself that performed with numbers like that, and these ones are new. This is a better deal. I already mentioned the impact of the low interest rates, and then your insurance premium is lower when you buy new too. And with the concrete block construction, your insurance premium can really be as low as $49 a month for a $200,000 property. And then plus you get better appreciation on new construction than you do with existing construction. So again, their price points are basically $160K to $220K. This might be the time when you pick up a half a dozen of these at once, because they do volume, they do have inventory and even selection for you. They've got 9 builders building exclusively for them. So to help answer a lot of your preliminary questions that you might have and more, we ask that you get the free report about new construction Central Florida income property at GetRichEducation.com/Orlando. You can get more specifics and numbers that way. Get started there at GetRichEducation.com/Orlando, and then you can get started with looking at some properties after that. I'm Keith Weinhold, back next week to help you build your wealth. Don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.